welcome everyone to Almus Market Mornings, your daily dose of financial updates. This is your host Swaraj, and with me I have JK, who will take us through the developments of the day. Now, a lot of things have played out in the overnight markets. We have seen Russia intending to use ruble for receiving oil payments with non-friendly nations. We also had UK providing support to Ukraine by means of donating anti-tank weaponry. On the Indian front, we had India's merchandise exports exceed 400 billion USD for the first time. JK, what is your take on these developments and how have the markets moved overnight?
Hello, good morning. So the headlines have not been supportive of risk. Talk of chemical weapons by Biden, and more sanctions on Russia on the anvil. Russia demanding payment in ruble for oil. More Fed members calling for faster pace of rate hikes. US looking to restore many items of import from China back into the tariff as they are unhappy about the ambiguous stand on Ukraine attack, all leading to profit taking in stocks after their recent counter trend rally. Powell, of course, did not make any comment on monetary policy in his public appearance yesterday. Yields retraced slightly again after a big rise recently. IMF is poised to cut its global growth forecast for 2022 as a result of the war in Ukraine and seeing the recession risks in growing number of countries. They are also looking at economies that have been fast to recover from COVID or in a strong position to cope with the reverberations of Russian attack. US in particular has fairly strong fundamentals. As the Federal Reserve and other developed central banks raise rates, it will be a big shock for many countries. IMF also has just touched upon the dollar's role. They said the US dollar is not about to suffer an imminent demise as a dominant currency in the global financial system. But we could see pockets where we might see shifts happening. We are likely to see some countries reconsidering how much they hold of certain currencies in their reserves. And it is clear the way the energy has traded, things could change forever. So definitely we are in for some sort of a structural change in the global monetary system, or you can say the currency system. UK, of course, had another record inflation number yesterday. Its highest since 1992, as the soaring food, fuel, and energy costs continue to deepen countries' cost of living crisis. But there is a dilemma for UK central bank. Raising rates at a time when household bills and rising taxes could stifle economic recovery by putting consumers under too much pressure is not easy. Bank will need to carefully balance the need to try and tame inflation while not tipping the economy into recession. Also, the February CPI was way above consensus, which they cannot ignore as well. We had some interesting moves in ruble since the war broke. In fact, we are just completing 1 month of Russian attack on Ukraine. The first day was 24th February, and today we are on 24th March. On that day, the ruble had rallied from a low of 80 and hit 150 in the course of next few days. And now it trades back at 90, which is a huge recovery. Considering the kind of sanctions imposed on them and the hit to investments in Russia, this is a stunning recovery, I can say. It may be partly due to Russia demanding payment in rubles for its exports, or maybe some considering it's an extreme undervaluation of the Russian currency due to which they have bought back the ruble. Interestingly, most EM currencies like South African rand, Mexican, and Brazilian lira all rallied yesterday, again due to commodities rising. Gold has inched up above 1930 resistance again and looks good for a move to 1990 in the sessions ahead as risk sentiment is soaring. Yield on 10-year US notes dealing at 2.357%, while the gap between the 2 and 10-year notes at 21.9 points after collapsing to 13.5 on Tuesday. Treasury yield curve shifted a little lower on value buying and risk aversion on Russia-Ukraine spat. 10-year Indian G-Sec yields are muted at 6.83%. Up to the year end, it seems to be in a range between 680 and 688. Of course, coming to our own rupee, you touched upon the exports hitting more than 400 billion, but that's not relief for a country which is seeing increase in the trade deficit consistently. While export sector by itself improving is a good news because it can generate more employment, etc. For the exchange rate, it's still not such a big relief unless you are able to curb imports or exports increase to such an extent that it meets most of the import demand, and that's not going to happen very soon. In the meantime, renewed rally in Brent above 120 has put the rupee in a dock. We are seeing very good demand on dips for the dollar from private and PSU oil companies, absorbing much of the year-end related selling from exporters. Today, we are likely to open around 76.50, and we do expect RBI to step in if there is high volatility. Meanwhile, Fitch slashed India's growth forecast for the next fiscal from 10.3 to 8.5, citing soaring energy prices and rising inflation. We will await IMF forecasts, which will be published in the days to come. Overall, I expect INR to stick to the range of 75.70 and 76.60, and any overshoots will be resisted by RBI actions. Thank you. Have a good day.
Okay, that was quite insightful, JK. Just to sum up, we have completed 1 month since Russia invaded Ukraine. The situation is still evolving very quickly. On the Federal Reserve front, we are seeing more Fed members calling for faster rate hikes. UK has posted record inflation numbers backed by soaring energy prices, which is affecting everyone globally. So everyone, please ensure you have prudent risk management practices in place. That's it for today. See you all tomorrow. Bye-bye.